Hello and welcome to this week's recap of the DAX trading sessions. So we're looking at the CAM levels from Monday the 30th of October to the 3rd of November. I'm just going to go back to the 30th to kick off the week. So it was a Monday. What happened was the market opened, pushed up into the R1 and breakout long. It peaked over a little bit. We got in just before these levels here. Probably should have waited, but held that for the day. Really, the target should have been here. However, I didn't set the target properly, unfortunately, and I closed the following day at a profit. Looking to the next day, we came down, touched the pivot, and kind of came very close to the close gap of the previous day. So at the open, we were looking for long positions, as you can see here. So we took a sell position on the Monday, made a profit there, took 4 buy positions on this day, basically getting in and out, trying to judge the market, and realistically could have held that position. However, there was concern that because the market has been quite negative, it could have continued on as a negative day. But it was very positive, so could have held that trade for a lot longer. I only took out little clips throughout those trades. So it was basically opened up above the close gap, came down, touched it almost. So we were within about 5 points of the close, and then we could have taken really 120 points out if you had have held that position. I would have been looking to maybe get out at the high if I was looking for a specific target, but I was pretty happy with just taking those little snips out of the market. For the Tuesday, moving over to the Wednesday, it was a bit of a trickier day. So what did we have? It was the first day of the month. Often that's a good buying day. So we did take a buy position. Very tiny one, basically bought off the Bollinger spike outside, kind of came back up. It was a little bit of a late entry, using the R1 as support, looking for a long entry. Obviously there was risk to head down further and hit the high in the close gap, but we took an exit after kind of not really seeing what we'd hoped for. So a couple of bars later, we took a small positive trade. Realistically, had we have entered the market earlier, before the market opened, when we touched the R2, could have realistically looked for a high or a close target, which it did reach, and possibly could have taken a short position all the way down. However, we did get long on the 1st of November for a very small position for a win. Came right down to the pivot, so breached the high, the close, and reached the pivot, and then basically on to the point almost, rose for the rest of the day for about 170 points and beyond, up to the R3. It's a very positive move. The market did want to come down and break the high in the gap, the close gap there first. So the market kind of waited on the first day of the month, soaked up some of that volume below before moving up strongly. This was the Thursday, had the first loss for the week, and basically should have waited a little bit longer, but it wouldn't have helped for the entry. So basically got in a little bit before the R2 was touched. The market went up to the R3 and beyond, so only buying opportunities were existing. Now, reflecting on that loss, basically the market kind of held very steady and didn't really show any signs of wanting to turn back down. The ideal target would have been the high or the close on that day. However, it hasn't been seen. So that extreme gap, the previous day's high at 14,950, will at some point in the future form a target if it hasn't already been hit on the next day. We'll just check that shortly. So basically very bullish momentum there on the Thursday and the first loss for the week. And then moving over to the next final day, so the Friday, took a short position, got out a little bit early. The market almost reached the close, but it didn't quite. So anybody that didn't jump out within, looks like about 6 points. Usually you're hoping for about 4 points. So I had a target set just below here, but I did get out early. I had things on, so I was heading out, and I prefer not to be in the market when I'm out doing things and not able to watch the trades. The market was basically sitting below the high. It kind of spiked up a little bit and it looked quite bearish. Had another opportunity to enter just before the R1 to target the close. Didn't really hit where we wanted it to go, and I wouldn't have particularly wanted to get long that day either. Some traders might have had a position to get short on the breakout long here as well. So we'll just have a look at if you had a 40-point stop, you would have been safe and you'd be in profit by about 40 points right now. Obviously you've got the weekend coming up. Monday will open, there could be a gap there, so that's always something to be considerate of, is that Friday to Monday there can be a difference in the opening price and it can jump your stop loss or take profit, causing increased risk at times. Now, as mentioned earlier, a target for the future at 14,950 hasn't been touched. So at some point in the future, we're expecting the 14,950 to at some point be collected. So the price should come down to this point at some point in the future. So that could be a potential target. If there's nothing else sitting on your chart, that is a level that you might want to target if you're looking to go short from these levels, or from the open on Monday, for example. If it does look like a bearish day based on the Camarillo levels, the market may want to track down to this high on the 2nd of November. I've got the trading history down here, so it's mostly wins and one loss for the week, and totaling $15.28. Now you might be wondering why the volume is so small and the numbers are so small. The idea of trading like this is to basically have a minimal account, so a very small account, and you're placing the orders based on the market rather than what you're intending to make in terms of monetary value on the trade. So it takes away the value of money from the market, and you're using the analysis that you've got to determine actual trades. Rather than chasing money, you're respecting the market and what it has to offer. And then what I do, you might have seen some of the tutorials about the Python copier. I send that over a socket to another computer which trades another account at higher risk, and I don't necessarily watch it. I watch this computer and I watch this market to take the mentality away in terms of the money side of things. So it's purely focusing on the market. These smaller amounts, if you lose, for example, $6.60, it's not the end of the world. It's a lot more bearable to watch and actively make good decisions based on what you're seeing on the market. So that's why I do that. I trade very small amounts on one account and I send it over and scale it up on another account. That's it. That's the weekly recap on the DAX. Hopefully this helps you learn and understand what actually happens in the market and helps improve your decisions in the future. That's it from me. Have a great day.